in the spirit of bubble stocks and Snapchat, I have two charts that I wanted to share. Keith, I don't know if you can see them, but I think Eric can throw them up here. So the first one shows Snapchat's free cash flow unlevered on a trailing 12-month basis, and then their free cash flow if you include stock-based comp, and then compare it to revenue. So you can see that the delta between free cash flow and then if you exclude the stock-based comp from it is massive. So basically, the only thing that's funding this is the fact that they can issue stock. And then if you look at their adjusted EBITDA on the next slide on a trailing 12-month basis versus stock-based compensation, in 2021, stock-based comp represented 177% of the reported adjusted EBITDA last year. So there's no scale in this business. It's only dilution, right? So it's basically just smoke and mirrors in many ways. The business is scaling, but not in the way that you really want to see it scale in terms of like generating true incremental cash leverage. And lo and behold, they issued 1.25 billion in convertible notes this morning, right? So they need to.
It's scaling in terms of the compensation scheme to the people that get paid in stock.
Yeah, which is it's true. I mean, it's good when the stock is up. I mean, when your stock's down, 50-60% in straight down in 3 months, that doesn't really help a lot of people's.
This is exactly what happened in this quarter of the year 2000. Like the bubble was already blowing up in multiple places, but then it got to the main line of the market, and then everyone started talking about things like this, and it was everywhere. I mean, it's the same. It's not like Wall Street comes up with. Well, they do come up with, I guess, some innovative and new types of ways of depicting numbers, which Ami has talked about extensively with his stocks, and so have you. But this is as old as like stock-based comp and cash flow versus. It's actually very interesting with Snapchat because it's very consistent with their product. You take it now, you don't see it.
Yeah, and look, the fact is, if we're in a rip-roaring quad 2, quad 1, I'm not going to be sitting here. Bitching about stock-based comp. It's not, because it doesn't matter, right? But when you're in quad 4 and revenue growth is slowing, and when free cash flow actually matters, right? And bubbles are imploding, you have to pay attention to the balance sheet. And I think things like stock-based compensation matter a lot.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.